Live? Oh, okay. So, hello students, and welcome back to BankExamsToday.com. So, today we are doing the very first session on RBI Grade B FM series. And we did around, I think, 19 sessions for booster series in which we were doing uh, ESI and general awareness. So, today I thought why not to start with the FM. Okay. So, in this first series, I'm going to start with the very basics of that financial markets chapter. From the financial markets chapter, today I'm doing the topic mutual funds. Okay, so if there is any doubt in your mind, anytime you can ask me your doubts in that super chat section and I'm going to answer you. Before starting, let me tell you that we have already started the RBI Grade B 2019 course, in which we are providing the video classes, notes, test series, and we are solving all the doubts as well. So last year we got 24 final selections, and let's just start with our first question. Really simple. Units of dash funds must be listed on stock exchange. So, okay, student, let me just tell you, sorry for that. Let me just tell you, there are, first of all, two basic types of funds: open-ended and close-ended. See, students, in an open-ended funds, the most popular kind of funds, you can go to an AMC, let's say the Reliance mutual fund, the Axis mutual fund, HDFC mutual fund. This is an AMC, right? Like Reliance, Mirai, HDFC, right? These are all AMCs, asset management companies who are managing your assets, right? So what is an open-ended fund? You can go to this AMC anytime and you can buy your mutual funds units, or you can sell your mutual fund units anytime. But in case of ELSS, equity linked saving schemes, under section 80C, you cannot sell before 3 years, right? There is a lock-in period of 3 years because it is a tax saving fund. Other than that, there is no limitation. I mean, but there is an exit load in most of the funds. It would be like 1% if you redeem your funds before 1 year. So that is exit load, right? Because they want you to invest for a long period of time. So that is an open-ended fund. Go to your AMC, buy and sell anytime. You can buy the fund anytime. You can buy the NAV, you can buy the units or sell the units anytime. That's up to you. That is an open-ended fund. What is close-ended fund now? In the close-ended fund, there is an NFO which opens from a particular day for a particular period of time, right? Let's say from 10th to 15th of March, right? It'll be open for specific period of time, right? So once you buy these units, I mean, there will be a specific time period. Let's say there is like 10 years mutual fund, right? Close-ended mutual fund. You cannot sell, you cannot go back to the AMC and ask for money. You cannot. Once they sold those units to you, once you got these units, there is a lock-in period of 10 years. You cannot go to the AMC, but you can go to stock market. You can go to stock market or secondary market, and there are certain people who want to buy these close-ended units. One important thing, why anybody would want to buy the close-ended fund? If anybody wants to make an investment, he or she will go to the AMC and he or she will buy the open-ended funds. So most of the time, these open-ended funds are available at high discount on stock exchanges, stock market. So the correct answer, let's get back to the question. The units of close-ended funds, must be listed on stock exchanges. So let's say if I have like say 100 units and the current value is, let's say 50 per unit, and I want to sell it on the stock market, even if nobody is buying, I'll give it at like 10% discount. I'll get a lot of buyers, right? So that's the point. It should be listed on a stock exchange. A close-ended fund should be listed on a stock exchange, right? Let me get my phone. Sorry for that, students. Let's come back to the question number 2, right? Yes, close-ended funds are risky. I mean, let's get back. Yes, close-ended funds are kind of risky because See, your money is locked for 10 years. I mean, so risky, I would say. You can, there is a liquidity issue. There is lack of liquidity. That's a problem with the closed-ended funds. Risky, I won't say it is risky, but there is a liquidity crunch. There's a liquidity issue with the closed-ended fund. You cannot take back your money from the AMC. You need to go to the stock markets where you need to sell your units at a discount rate. I hope now everything is clear. I think yes, everything is clear. Okay. Ujjwal Mishra discount for PWD candidates plus please WhatsApp me, Ujjwal. 906720100. That's my WhatsApp number. Okay. So anyway, open-ended schemes generally offer exit option to investors through stock exchanges. Is it true or false? You are not going to find such questions in the exam, but just for your conceptual clarity, I'm doing this question. Open-ended schemes, they offer exit option to investors not through stock exchange, directly through AMC. If you bought the units from Access Mutual Fund, if you bought the, let's say Access, whatever, Access Small Cap, you bought Access Mid Cap Fund, okay, from Access, okay, that's an open-ended fund. And after 2 years, you felt like I need money, I need hard cash, I want to buy land or whatever. You can go to Access and you can redeem these, these units. There is no issue. So you cannot, because these open-ended funds are not listed on a stock exchange. Only closed-ended funds are listed on a stock exchange. So this is not an option. So this is false. Open-ended funds are not listed on a stock exchange. Okay. Only closed-ended funds are listed. High yield bonds schemes invest in junk bonds. So what is junk bonds? Really important topic. What is junk bond? So as the name suggests, junk bond, when the AMC is investing into high risk units. Okay. When the AMC is there is a certain types of funds, right? And debt funds, debt funds. And they are investing into high risk instruments. For example, a few months back, if somebody was investing in ILFS in the expectation of high returns, that would be, a junk bond. So that's a junk bond. High yield means high interest rate. You'll be getting high returns. So if a bond is investing in junk bonds, a high yield bond scheme, they invest into a junk bond. So that one is true. Okay. So why I did this question, because I want you to understand the concept of junk bond. That's really, really important. Okay. Is it useful for RRB scale to marketing officer exam? I think yes. Yes, for sure. It is useful for the interviews, at least. In a focused fund, in how many stocks a fund manager can invest. So this is a kind of fund, the focused fund. In how many stocks the fund manager can invest? At the end of this lecture, I'll provide you the categorization PDF. Please go through it. That would be your homework. So this is 30. 30 is the correct answer. In a focused fund, the fund manager can invest into 30 stocks. Sorry for that. In a conservative hybrid fund, there is a aggressive hybrid fund and there is a conservative hybrid fund, right? They replace the balanced fund, right? Minimum investment in a debt instrument required is, it should be in the range of 75 to 90%. So minimum is 75%. Okay, quite simple. It's not 30 in the previous. In the previous question is 30. It's correct. So students, what's your homework for today? On Google, just search SEBI's mutual fund categorization circular, and please download the PDF from SEBI's official website. Don't go through the news websites and all. Don't read the analysis, because SEBI's official website, I'll tell you how to download that. Okay, I'll just tell you, don't worry. Okay, that's really important. That's your homework for today. I'll tell you how to download that. Before that, okay, last year, in few more weeks back, 58 of our students, they cracked the marketing officer exam. These many cracked the SEBI, NABARD, Vijaya Bank, Bank of India. And I recommend you to take the RBI Grade B 2019 course if you want to. Now let me tell you how to download the SEBI's, SEBI's categorization. SEBI, just go to Google and search SEBI Mutual Fund Classification Circular. Just search it. I think this is the one, the first one from SEBI. This is not categorization. Students, have patience. Let me just find it for you. Loading, and loading. Have patience. Anyway, SEBI's website is not loading as of the moment. I'll put a link in the description or the first comment. Please go through that. Really important. This is the homework for you. Okay. Anyway, this is SEBI's mutual fund categorization. PDF I'm searching. Still, I'm not getting it. I think it should be this one. Yes, this one. This is the latest PDF. Okay. SEBI mutual fund categorization PDF. And there is MFI India's website. Just open it. And this is a circular dated 6th of October 2017. Okay. In the whole circular, please go through this chart. The equity schemes, various types of equity schemes characteristics, and the type, and then debt schemes, and up to this hybrid schemes. Please go through it. I mean, the other schemes as well. So these 3 pages, please students go through this. They're really important for the exam. For all the exam in which financial awareness or financial management is a topic. So that's all for today, students. Thank you and have a very nice day. Bye.